Have you ever wondered what you're paying into when you see that line item on your paycheck that says CPP and a dollar amount? Well, today we're going to be talking about CPP and how much you're paying into it, the increases that we're seeing in 2022, as well as what benefit you could get out of it, and is this a good investment or not? And if you don't want to watch the end of this video, my opinion is that CPP, there's a lot of wasted overhead and you're not going to ever reap that full benefit that you do versus if you were to invest that money yourself. Obviously, you can't not pay CPP. As a Canadian citizen, you have to. However, I'm hoping this video will inform you better on what CPP is, and if somewhere down the line we can make a change to it, then we'll vote for the better change. So to start off this video, we're gonna have some shocking facts about CPP. So if your salary last year was less than $61,000 and this year it's also less than $61,000, then the percentage increase that you're gonna be paying into CPP is 4.6%. Now, if you contrast that with if your salary is over $64,000, then the percentage increase in CPP that you're going to pay in 2022 is 10.5%. There's two factors that play into this larger increase for those who earn over $64,000. It's the fact that the max salary that can be, taxed by CPP has increased from $61,000 to about $64,000. On top of that, there's also a percentage increase on the amount of CPP that you pay from your paycheck each year. That amount has gone from 5.45% in 2021 to 5.7% in 2022.
Oh man!
So the increase from 5.45 to 5.7 is around 5%. And the other 5% increase that you're seeing if you earn over $64,000 is the max salary that you can be taxed on for CPP, going from $61,000 to about $64,000. If people like us who are working right now and are seeing a 5 to 10% increase in their CPP contributions, well, we better hope that our parents or our grandparents are reaping the rewards of around a 5 to 10% increase. But the data shows that they're not even seeing that kind of increase. The increase in CPP amounts from 2021 to 2022 was only 3.98%. So I'm kind of scratching my head there thinking, why is the CPP payment only increasing by about 4% versus the contribution is increasing from 5 to 10%? And right now, if you were to look on the Government of Canada website, you can see that there's about 14.9 million people paying into CPP. And the people who are reaping the benefits from CPP, it's around 5.6 million people. So it's about a 3-to-1 ratio. But perhaps the reason why the increase in CPP is only going up by 4% versus the payments or contributions that we make is going up by 5 to 10% is because the population who's receiving CPP is increasing faster than the number of contributors. If we look at the amount of people who are receiving CPP from 2014 to 2021, that amount increased from 4.4 million people to about 5.6 million people. That represents a 29% increase. However, the number of people paying into CPP in 2014 was around 13 million people, and today it's 14.9 million people, representing an increase of around 14%. So the percentage increase in the number of people receiving CPP is double that of those contributing, which might be an alarming stat, and this is why CPP has increased so much in the past year or so. But I don't think these facts are enough to figure out why CPP is increasing by so much, and what's a conclusion we can make from it. I've got a couple charts on my computer which we're going to check out right now. So I have 3 different charts thrown up here, just comparing the CPP contributions, the benefit increase, as well as the total contribution increase, and the CPP account balance increase. So the first chart here, top left, we've got max CPP contribution versus the benefit. So this is the benefits paid out in CPP. The benefit is in red, and you can see the benefit increases roughly by 2%, and it's actually lower in 2018, 2019, and 2020. When inflation has been increasing 4 or 5%. But you can see the max CPP contribution shot up to about 6% in 2019. And in 2020, it's 5.42%. So we're seeing some massive increases in the max CPP contribution amounts. This isn't including 2021 or 2022. Just like I mentioned earlier in the video, this year's contribution, the max amount that you can contribute if you're earning over $64,000, it has increased 10%. So why aren't we seeing those increases on the benefits? The next thing that I'm comparing here is CPP benefit increase. So this is an increase to the benefits versus the contribution, the total contribution percentage increase. So the total amount collected for CPP that year, how much it increased over previous years. And we're seeing, again, the blue line here is actually representing the benefit payout, which is the exact same as the first chart. In the red line, this is the percentage increase year over year of the total amount contributed to CPP. We can see that in 2019 over here, the total amount contributed to CPP increased by 9.69%. That's way more than the percentage increase in the payout. The last chart here is the max CPP contribution percentage change. So this is this blue line back here in this chart versus the CPP account balance increase. So this is the total pot of money that's invested by the CPP organization. And that amount is actually shown, or percentage increase in account balance is shown in red here. It's increasing on average by about 10% each year, whereas the max contribution is increasing by about anywhere from 3 to 6%. And you can look at the numbers right up here, they're shown in raw data. The total account balance as of 2021, we've got $497 billion just sitting there invested for CPP. In a way, it doesn't really make sense to me why this CPP account continues to increase in value by such a rapid amount versus the payout. Ultimately, it seems like it's a money trap for you to invest in CPP because you'll put in more than you'll actually get out. You're not going to see those 10% returns because your percentage return each year is only increasing by 2 or 3%, versus the increase in the actual CPP fund is going up by 10. And on top of that, contributions are increasing at a faster rate than the benefits are. Looking at some statistics from the CPP fund, you can see here a projection 30 years out in the future that the fund is predicting they're going to have about $3 trillion in assets by 2050. Currently, they have $500 billion. So they're planning to 6x the amount of CPP investments they have. Now in this video, I've been making a lot of comparisons 20 years out. So if we're going 20 years out from right now, we're looking around 2040. And the total assets that this investment fund is predicted to have is around $1.7 trillion. That's a 240% increase. It would be nice if we saw a 240% increase in the CPP payment. However, that's not the case if we adjust the CPP payments by 2%. This article here shows the max monthly payment by 2040 of around $1,531. Now, if we do the math, the total percentage increase in your monthly payments from now till 2040 is only about 22%. If the portfolio is growing 240%, and your CPP payments are only growing by 22% in 20 years, well, it looks like the fund is basically 10xing your return on investment. And as people who are paying into CPP every single year, this seems quite unfair. I mean, maybe I missed something here. Let me know in the comments down below if I have some error in my math, but based on the numbers that I showed here, it's ludicrous. Unfortunately, if you remain in Canada and you're earning an income, you have to pay these increases. It's not an option. But I guess the only thing that you could do is maybe write a letter to your government, become more educated on these policies, and ultimately I guess you could weigh this into how you vote next election. Right now it just really doesn't seem worth it, or we don't have any proof that CPP is going to improve for us down in the future. It seems like for us who are millennials or Gen Z, we're kind of paying into this black hole called CPP. And one day we might see fractional returns from this investment of ours. And that's why I think it's very important for the Canadian population to take their retirement funds into their own hands. Yes, you're gonna have to pay out CPP, but at the same time, at least you can set aside your money and invest in stocks, real estate, or whatever else that will generate you future returns. And ultimately, that's the goal of my channel, to teach you how to invest and also walk alongside you. I show my portfolio every single week without fail, whether I'm up or down. And I try to be as transparent as possible with this portfolio. I'll share with you guys the mistakes that I have as well as the triumphs. Throughout this past year, there's been times where this portfolio has been up like 6 or 7%, and other times where it's been down like 8 or 9%. But I know to be a smart investor, I have to stick out the strategy for more than a year because the portfolio was designed as a long-term investment portfolio. So that segues perfectly into my portfolio, and here are the stocks that I bought this past week. So I pulled out my portfolio and you can see that last week I made most of my investments, or actually all of them, on the 29th of December. I bought one share of Air Canada. Again, I've been dollar cost averaging into the stock at $21.35. And I bought 2 shares of D2 at $13.47. The third purchase I made was Nuvei, and I bought this on the 29th as a fractional purchase order, and the cost basis was $86.83. But for me, looking at Nuvei stock chart, I don't remember seeing Nuvei stock going at $86 on the 29th. If we do some further investigation to figure out what happened here, on the 29th, the stock traded around $82 to $84 per share. But where we see $86 per share was actually the next day on the 30th. At the peak point, 3 o'clock, was $86.80. And that seems to be where Wealthsimple Trade bought my fractional shares. And I can confirm this if I look at my National Bank shares, where I bought a fractional share purchase on the 29th, and the order got fulfilled on the 30th as well. So looking at National Bank stock on the 30th, around 3 p.m., the price was $97.08, which is very close to $97.07, which was the cost per share here. So I think if you're buying fractional shares, the day that you purchase the shares, at least from what I saw from these two examples, they actually execute the order the next day between 3 and 3:30 p.m. So that's the pricing that you're expecting to see. The last stock that I bought for the week was Enghouse, 1 share at $48.84. I also received a dividend last week of $4.62 from Sun Life. Tracking this portfolio, after about 42 weeks or so, I'm up 1.45%. I think that most retail investors who are seeing returns like this are probably turned off from investing and don't think that it's worth it. However, for me personally, I have a long-term view on investing, and the short-term performance of a year and only seeing 1.45% doesn't really bug me. I think that these positions I have in this portfolio, a lot of them will continue to increase going forwards in the future, and I'm investing for 3 to 5 years out, at least for this video series, and in reality this money will probably stay invested until I retire. Here I've sorted the portfolio by percentage returns, and you can see that the return percentage varies across a lot of different stocks here. I'm down close to 40% on some stocks and up by 21% on other stocks, but this changes on a week by week basis. I think the main point here that I want to make is that stay consistent with your investments even though you're not seeing returns in the short term. Investing is a long-term game here. In 1 year you might have a bad year or just a mediocre year, but other years you might have great years. And the market this year had a great year in general, but the stocks that I have in this portfolio had varying performances depending on when I bought in. The losses that I'm seeing in my portfolio, yes, they can bug me a little bit just because it's red and not green. However, I think that there's lessons learned from each of these positions and what I could have done better in the future. I mean, obviously I couldn't predict the future and know that they're going down in the short term. I also haven't sold these stocks, so I still have conviction that these companies will be better off down in the future versus where they are today. And that's really where the learnings come from. Trying to figure out why these stocks are down in the short term, what's causing that, and is it still worth buying more into them? And you can obviously see from my purchases like from Air Canada or D2L or Enghouse, I still believe in these stocks long term and are willing to add in at these discount prices. So if you're sitting there right now and frustrated with your portfolio and seeing all this red in your portfolio, well, you're not alone, and I think that you just have to get your head out of the gutters and realize investing is not a short-term game for most people. You probably start off investing with a long-term mentality, but the short term is really getting to you. I think you just have to stay strong in your investment strategies, continue playing it out for at least your time frame which you set out to invest for. And at that point, that's when you make your conclusion whether your investment thesis failed or not, and if you decide to quit, then at least you gave it your best shot. But if you quit now before the time frame that you set up for your investments, then you really haven't learned anything, you've gambled your money, and it was a waste of time. So now wrapping up, we've talked about CPP and how it's impacting you in the future going forwards when you're earning income, and it seems like CPP is not a great investment. Stock market investing is not foolproof and you are able to lose money on the market. But I think that over the long run, if you invest in relatively safe companies or ETFs, then as long as the economy continues to grow, then your investments will also grow. And historically, it's a heck of a lot better than CPP and what you're getting from it. If there's anything that I missed or questions that you've got, feel free to drop a comment down below and I'll try to reply. I've got a couple of videos up on the screen right here for you guys to check out. If you're there, I'll see you there. If not, keep up the grind and have a great day.